be the key beneficiary of this whole GST reset will be the auto space. And let's talk about the tire space in particular, because from that 28%, 18% is going to be the new rate. But what can it mean for the volume and the growth guidance going ahead? Let's try to understand that from the industry perspective. We are being joined by Mr. Kumar Subbiah, who is the CFO of CEAT, joining us on the show. Mr. Subbiah, hi, morning. Good to be speaking with you. And with this GST implementation from today, and even the demand was holding up, what sort of a growth are you penciling in? How excited are you with respect to this whole GST reset? Because we believe that you have already guided for a double-digit revenue growth in FY26. How better can this be with this new GST rate?
First of all, we are very excited that there is a drop in the GST on tires. And tires, you would know that were subject to 28% GST, considering that it's a common man's product and it is essential for economic development. From our stand, okay, it's a very positive development. And we believe, GST will, rationalization will stimulate economic growth. Generally, our growth rates are linked to what happens to the economy. So therefore, we are quite excited that this should help in terms of delivering higher growth, both for auto sector, also for auto ancillaries like tires. It's true that we are aiming for double-digit kind of a growth in the current year, as we did in the last year. This will add to the positive sentiment as far as our growth ambitions are concerned.
Right, Mr. Subbiah, hi, morning. Let's talk about your outlook. Segment-wise, where do you think the biggest traction or the strongest traction could be seen? Could it be from OEMs? Could it be from the replacement target? Or where do you see the strongest traction?
See, with respect to OEMs, it will be indirect in the sense that OEMs will buy more tires if they are able to sell more vehicles. So considering there is a good GST cut, particularly on two-wheelers, and also some lower-end passenger cars. So we're hoping that, this will stimulate demand for at least those categories, and therefore we expect our tires that are going into these products would certainly grow in line with OEM's growth. With respect to the other categories which are selling in the replacement market, passenger car is one area where, people like you and I buy tires from the retail shops. So a drop of almost a 10% on account of GST should certainly help in terms of buying a right product, right brand. Okay, even the replacement of tires could happen. Similarly, in truck and bus radial tires, a lot of institutions who are availing a GST credit, they may not find a significant impact on account of that, but there are many who are not within the GST radar at this point in time because of lower threshold or because of the individuals. They will find a 10% drop in GST very encouraging, considering the tire is the second most important element of cost in the truck industry. So therefore, from that standpoint, or a freight corridor, from that point of view, it should help positively.
Stay with us. Lots more to talk about with you, but I also want to get on board Mr. Arun Maman, the VC and MD at MRF Limited, and he's also the chairman of Automotive Tire Manufacturers Association. Mr. Maman, great to have you today on the show. And you've been projecting that the tire industry revenue is likely to grow by 12x by 2047. Tell me, what gives you this kind of confidence for these growth trajectory, and can GST now turn out to be as a filler?
I think the market is doing exceedingly well. The population is a young population, and the OEMs are doing well, and also the export is doing well. So with all this adds up to this, we're projecting a 12x growth.
Right. Mr. Maman, just to, take on to that point forward, now this GST reset from the earlier 28% to now 18%. Tell me, how is it that you see this alter the dynamics for both tire manufacturers as well as consumers in specific?
First of all, I'd like to compliment the government for implementing GST rate reduction. And it is indeed a positive step forward by the government. And this will definitely bring about transparency in the system and definitely ease of doing business. So coming to the tire business, yes, the GST rate from 28% has come to 18%, and to farm it is 5%. So this will definitely stimulate the demand for the tires, and as you know, the tires will also become cheaper.
Mr. Subbiah, if you can come in here and give us an indication of how demand is going to pick up, given the fact that you are suppliers to many of the OEMs, and have you seen an uptick of demand coming in from OEMs going into the October, November, December quarter?
Wherever there is a positive impact on account of GST rationalization on vehicles that are produced by OEMs, we expect our growth to be good. Considering that this has happened just before the festive season, okay, I think it will add additional positive momentum to the growth. That's the way we see. Okay, overall at high level, our endeavor is to grow double digits in the coming year, and we are moving in that direction.
And do you see that the second quarter numbers to be pretty much on a growth trajectory, or you have seen some deferral of orders coming in because of the GST issues?
Is this question to me?
Yes, Mr. Subbiah.
Yeah. See, look, ever since the GST possible change in GST rate was introduced, particularly from early September onwards, there has been little bit of slack in demand, particularly because many of our dealers, distributors wanted to keep the pipeline, minimum number of inventory in the pipeline. We hope the trend to change from today as the GST rates are, GST rates are effective today. We are already seeing in terms of, the need and the demand from the channel that we have already established or received from them. So therefore, in terms of growth, as far as quarter two is concerned, it is in line with what we had expected, except the fact that the last 3 weeks there has been a little bit of lower level of growth on account of getting the benefit of GST effective from today that we would apply on all our invoices.
Right. Mr. Maman, if I could just come to you, premiumization, exports, electrification, these are all the diversifications that you have made in your business. Tell me what would end up being a growth driver for you eventually?
The replacement market will contribute the highest, followed by the OEMs and the export.
Right. And how is it that you plan to actually capture this opportunity from fleet management services? Can this really become a significant revenue stream for you?
Yes, it will, because more and more truck operators will come into the business, and they will definitely add to the turnover of the market.
Subbiah, if you can give us also an indication of how raw material prices have been going into the October quarter. Have you seen that flattening out, or there has been an uptick in raw material prices, especially rubber and carbon black?
There has been some downward movement in the raw material costs since beginning of this quarter and the end of the previous quarter. Natural rubber prices, particularly in the local Indian market, is now close to import parity. Okay, during the previous 3 or 4 months, it was at a premium to international prices. International prices is holding on. Some of the crude derivatives are showing a little bit of a downward trend. But overall, as far as quarter two is concerned, our estimate in terms of raw material cost versus quarter one, we expect it to be maybe lower to the extent of about 1% or 1.5%. That's what we see. Going into the next quarter, possibly, once the quarter is over, we would be in a better position to share our understanding and outlook.
And how are you managing the entire transition with respect to input tax credit? Is that still a worry, or have you got any input from from the government on how to manage that transition?
See, GST input point of view, there's not been much of a change. Overall, in terms of raw materials that go into the tires, there's only one material, nylon fabric, where GST rate has come down. But there's a little bit of a change with respect to coal. So overall, I think from our standpoint, the input tax credit is not going to change for us. However, the final product GST is coming down. As was also shared earlier, with respect to most of the tires, the GST rate has come down from 28 to 18%. In case of farm tires and tubes, it has come down from 18 to 5%. So with respect to input, I think what we sell to our dealers and distributors and OEMs, they should be able to take GST credit on available as per the invoices. Going into the future, I think the GST credit would be lower because the rate that we would be applying on tires would also be lower. I don't see much of an issue with respect to availing the GST credit. We have to have our systems and processes that captures input credit properly and ensures that the GST on the final product is corrected. And effective today, we are in a position to carry out all our transactions as per the changes that has been effected.
Right. Mr. Maman, lastly, we know that India is aiming for a very strong export footprint as well. Which global markets do you actually see as the sort of biggest opportunity when it comes to Indian tires specifically?
All along, it has been the US market for the tire exports from India. But with the current scenario which we are seeing, we'll have to wait and watch how this will pan out. But definitely, this will give an opportunity to open up other markets in the rest of the world, so which will add to the turnover of various tire companies.
All right, so that's about the tire space, what could be there in the store for the tire industry overall, and what this GST reset will mean for the industry in terms